after this hike in long-term capital gains tax that we saw being announced yesterday, the markets did not see a big fall coming in. We spoke with market experts as well as veterans to understand the rationale behind it. Take a look at what they had to say then.
I think my view is it doesn't matter the increase in long-term capital tax from 10 to 1.5%. The longer the period you hold, it becomes a fraction of your income. So therefore, that's not something one should bother about it. I think SIP culture that got built in the last few years, and SIP way of investing now has become a way of investing in the capital market. Definitely would have to be continued. I think would continue.
I think there has been a lot of noises over the last couple of months in terms of the rising interest in F&O speculation, and I think something was expected from the government and regulators to address that. But to promote the long-term investments, I think market wasn't expecting much change in the long-term capital gain tax.
Macro environment for these corporates or the companies where you have invested in, whether they can grow well and create capital gains for you is most important. I think market has become very matured. That's the reason it did not react very badly for this capital gain tax increase. And everything is all is well in the market.
We started with no expectations in terms of changes in capital gains, and therefore this small increase in capital gains tax is definitely not welcome. And the other thing is there are some uncertainties regarding the buyback tax. Obviously, STT has got increased. I am hoping that it is only for speculative transactions, not for delivery transactions, because the whole purpose of STT was in lieu of capital gains tax. So now we have capital gains tax as well as STT. But all said and done, if you are looking at a 15% return going forward, a change of 2.5% in long-term capital gains tax reduces your returns by maybe 30 basis points. So we'll have to work hard to make 30 basis points more than the 14-15% we were making. It's as simple as that.
My fundamental story, long-term story for India is still intact. So I'm not too bearish on the country just because this is one budget event. My profit has come down, to be honest. That's what has happened. But it's not something which would shake the market and then the confidence in the country. So the budget hasn't done anything fundamentally wrong.
All right, so minimal impact coming in from the capital gains tax that has been hiked is the word coming in across the street from market experts and veterans. But on that note,
if you like this video, then like, share and subscribe to ET Now.